Alright, so guys, before I jump into the Wyckoff stuff and explaining how to treat the Wyckoff simply and the fractal behavior of the Wyckoff and if we can solely trade based on Wyckoff or not. Alright, so before I jump into that, I have a few things to here. Alright. So basically, when we are trading, there are some few issues which we as a trader face. Alright. So number one is when we are analyzing our charts, we have a strong setup. We check out the fundamentals, and the fundamentals are on our side as well. And eventually, we get a confirmation of entry, and we jump in the trade. Alright. So basically, like it's something like that. That this is our POI. Alright, and as soon as price comes here, you get a good confirmation and stuff like that. Alright, and you jump in the trade. Alright, so your target is somewhere like here. Alright, but price is at the moment here, so everything is going good at the moment. But what happens is a session change or some fundamentals come in and price starts to come a bit down. So at this point, some traders, or maybe most of the traders would fear the market. Like they would fear that if trade will just hit their stop loss. All right. So you don't have to do that. All right. So your fingers, your itchy fingers, that is an issue which very traders face. All right. So to avoid that, you simply have to when you enter the trade, you have to place your alerts on the GP1. Maybe it's here. You have to place your alerts here, or maybe you have to place alerts at the top. Two. If you have the premium, you can place two alerts, and if you have one, you can if you have the free version, you can place one. So to avoid closing down the trade early when it hasn't even hit your stop loss and hits your take profits or stuff, that is a common mistake, and that is something which is against the trading plan, because according to our trading plan, we have to take an entry, we have to let it hit our SL, we have to let it hit our TP2 or maybe TP last TP. So we have to do that. So closing the trade in between is something which many trader faces. All right, so don't do that, guys. Just let the trade hit, and when you have entered the position, just place your alerts and close down your laptop. Just don't look at it, because markets or an algorithm behaves in such a way that it tries to you know miss the orders and stop out the orders. All right, like it tries to grab as much liquidity as it can. All right, so if the price if the algorithms if the algorithm is showing some bullish intention, and we know that the algorithm should be going upside, so do you think that the institution would want the majority to be in this bullish wave? No, definitely not. So what they would do is they would try to miss your orders by few pips, or maybe they would stop your orders by a few pips, or maybe in between they would start to do something like something out of sense, like maybe some sort of opposite setup, and they would try to make you close your positions. All right, so don't do that. Just let your trade hit your SL or GP. As long as it is back tested, you don't have to do anything, you don't have to worry about anything. All right, so the next issue is the same thing, the emotions. Now the second solution, you have to do that. The second thing which you need to do is, if you are not consistently profitable, and if you fear that if the trade is gonna hit your asset and you starts to panic and stuff like that, the issue in here is the panicking. All right, so the panicking thing usually appears when you have risked too much of your account. Like if if you consider example, like if there are two-person in a casino. All right, two-person in a casino. One placed a bid of 10 houses which he owned, and one placed a bid of one house out of 10 which he had. Both had 10 houses, but one placed a bid of 10 houses and the other one placed a bid of one house. So obviously, if the one who placed 10 houses bid lost the bet, then would he be panicked? If the things starts to go wrong, would he be panicking? Definitely he would be, because he has risked his entire savings into the bet. All right. While on the other hand, if you consider the other person who has bet only one house against the 10 houses which he had, would he be panicking? Yes, definitely he would be panicking, but compared to the other one, would he be panicking more? No, definitely he would be panicking less because he's just losing the 10% of his, the assets, all right? So if you are not consistently profitable, what you have to do is you just have to risk like one or maybe a maximum 2%, or if you just want to stay more conservative, you just have to use 1% or maybe 0.5%. So when you're risking very small proportion of your money, then when the trade is even when the trade is going wrong against your direction, you won't be panicking. All right. So that is the solution to this panicking issue. All right. So, the third issue which the traders face is about the confidence. All right. So, confidence issue in such a way like if the trade has come around your entry point and it is about to hit your entry, you would lack the confidence to enter. Like you would think of 100 things, like the price has some things right here which can push the price downwards and stuff like that. But your setup has been completed. All right, your setup shows that the price is bullish. All right, so the price will be continuing the bullish and has bullish intentions. But there are some things right here which is showing you that the price might continue down more. All right, so that is something, that is the issue of confidence, that you are lacking confidence. All right, so how do we find the solution to that? All right, so the solution to that is simply backtesting. All right, so I personally, whatever I backtest, all right, I usually do that for maybe like 1 year or maybe like 6 months. All right, I go over for past 6 months data. I use this replay button on here. If you're backtesting on TradingView, you can purchase the premium, and there are a few guys on Telegram which offers $5 premium, so it's a fair deal. You can use that. So you can use the Telegram replay too, or you can use the crack version of Solve Forex for MT4, MT5. All right, you can use that as well if you think you are good at being the MT4, MT5 platform. All right, so yeah, so backtesting is really an important thing. Like I previously mentioned, like if I were to say a good thing about my past 7 or 6 years of experience, that is to have a trading plan and a proper backtesting trading plan, right? And think of a situation like you don't have to backtest in irregular way, all right? Like for example, these are the sessions. Like this is the Asian, London, New York, alright? So for example, in New York session, you are sleeping, alright? You are sleeping in your J, alright? So if you're going over the backtest data, you are seeing like a setup formed in Asian session. So I would have taken the trade NHGP. I would have taken a London trade. It would have SL. I would have taken a trade which would have hit the TP. But think about practically about that. You know that you would be sleeping in New York session. So is it worth calculating the best text data of New York sessions? No, it won't be. So just delete that, alright? So only backtest those sessions where you think you would be active in trading. If you have some busy spheres in your life, if you have a job, or if you have studies, if you're doing studies, don't count those hours in your backtest data. Be rigid about that, alright? So if you are counting that data, and when you jump into the live testing, the results would be different. So you have to be extremely focused when you're doing backtest data, alright? So that is something like, if you have a properly backtested data and it has provided and it has yielded some good amount of ratios for the past 6 months or maybe one year, then you will be confident in placing your trade. Like you will know that I have backtested this specific pattern and it works like 80% of the time, or maybe it works like 60% of the time. So maybe if I get 3 consecutive losses, I would be in profits because I have my backtested data and I know that this setup works. All right, so that is some thing which I want you to discuss. uh, so let's just move on to, just a second. So let's just move on to the Wyckoff thing, and how can we treat that in a simplified manner. So basically, you know that I am a smart money trader. I, you know, when I shifted to forex trading, after maybe 3 months of retail trading, I shifted to smart money concept, and I have been trading that for some years now. But my mentor, it was Colton Lives Polish. If you search it on YouTube, you would find him. So my mentor was that guy Colton Lives Polish. So basically, he had videos of maybe 8 videos in his checklist, confirmation checklist. He had a playlist named as confirmation checklist. So he had around 8 to 9 videos of smart money concept. So, his first video was based on Wyckoff. All right. So, in my starting years of trading, I really didn't focus on Wyckoff, and I usually, started trading based on order blocks, market structure, and stuff like that. But I really didn't pay attention to the Wyckoff thing, which his first video was of. All right. So recently, like maybe like 2 3 months ago, I thought that why shouldn't I include the boycott, because my mentor was using that, so maybe he was using it for a good reason. And the day I started to use boycott, things has been completely changed. All right, the direction, picking out the directional bias has been quite easy for me when I was just using smart money concept solely. All right. So if you are trading two things together, specifically Wyckoff and smart money concept, things starts to get better. But for that, as I said, that I had been trading smart money concept for for the first few months, and after that I shifted, I added the Wyckoff thing as well. So it's really important to focus on one thing first. You have to master that, and the next thing you have to do is then pick the next trading style and use that as a confluence trading to your main subject. Alright, just as Jay was a smart money trader first, then he added Wyckoff to his trading. After mastering that, he went to the Elliott wave as well, and then he mastered that as well. So he's combining all three of those. Alright. So it's really important to have a focused approach on one concept first, master that, alright, then move to the next thing and use that as a confluence to your trading. So basically, the thing is that market are in like four phases. Like maybe it's pushing to the upside, right? It may be pushing to the downside. It may be pushing to the downside, but at some point it's reversing. All right. And the next thing is it may be pushing to the upside, and then we might see a reversal. All right, so let me just go over that again. Like, the price might be pushing to the upside, the price might be pushing to the downside, the price might be reversing from bearish to the bullish structure, the price might be shifting from reversing from the bullish to bearish structure. All right. So how does Wyckoff help us in determining these four things? All right. So on basically like the higher time frame, if you have watched my few videos, I usually, on higher time frames, look out for these things. All right. So basically, how Wyckoff helps us is that if you are able to identify that you know that there is some sort of distribution schematic being played out in this region, then you would know that the price is being it's doing some sort of reversal. And obviously, if you know that the price is doing some sort of reaccumulation, it can go to the upside. All right, maybe this is more like this. All right, so I'll just do that, and you can consider that the price is doing some sort of Wyckoff reaccumulation right here, and you would observe that the price has no intentions to the upside. All right. Similarly, right here, the price is pushing them down, and if at some point you observe that the price is doing redistribution, then you would be looking to short. All right. And same thing here, if price is pushing to the downside and you know that right here, instead of redistribution, price is accumulating, then you know that the price should be moving to the upside. So there are just these four phases in the market. The market is in either of these, and if you get to know that which part is the market in right now, your directional bias would be on point. So like before that, like trading basically like two is divided into two parts. All right, it's just two parts. It's one is directional bias and the second is entry. So if your direction bias is getting accurate, then entry won't be a problem. Like maybe you can, add some stuff to that, like increasing your stop loss, or maybe some conservative entry, then it won't be a problem. All right. So direction bias and entry, these are the two things. Like a trader only gets, stuck in either of those things. Like it's just directional bias, like he's struggling in directional bias, or maybe he's struggling in the entry. All right. So for directional bias, this Wyckoff is usually a good thing, and you can use that, for trading, for your trading. So um, basically, like let me just remove this, and I will explain this thing right here. So I really hope that you know the basics of Wyckoff. If you don't, like, I can't cover the whole basics of Wyckoff in just like 1 hour. I can't do that. So I will do, the simplified version of that. But if you want to study Wyckoff properly, then there are hundreds of videos on YouTube. You can study any of them. You can maybe read the ebook, the original one. You can even read that. But I'm just trying to show some stuff which I personally observed and I personally use the bike of oil the way I use that. So that is, consider this, that the price was pushing to the upside, and we at some point are seeing a distribution phase. All right. So we have this consolidation, and we have this U-dot right here. All right. So before I explain things, like in case of distribution, the highest peak is our UTAT, right? So highest peak ours is our UTAT most of the cases, alright. Sometimes the UTAT might not form, but most of cases the highest peak is UTAT, alright. So in redistribute, this is distribution, alright. This is distribution. So in case of redistribution, for example, this, alright. So we have this range consolidation. So in case of redistribution, we have the highest peak as you did as well. All right. Similarly, in case of an accumulation, the lowest peak we have is spring. All right. And similarly, in case of reaccumulation, sorry. All right. So in case of accumulation and reaccumulation, we have the lowest peak known as spring, and in case of distribution and redistribution, we have the highest peak as known as UTAD. Alright, so to make things, to make things 80% clear and simplified, what I'm going to tell you is that you don't have to trade before UTAD forms. Like everything which is forming before UTAD occurs, you don't have to pay attention to that. Like you don't have to trade, alright? So everything before the UTAD, you don't have to, you don't have to trade that. And similarly, when it comes to accumulation, reaccumulation, everything's that is occurring before spring, you don't have to pay attention to that. Alright. So once the spring occurs, you can jump in right here, and once the test phase occurs, alright. So after spring, the test phase comes, and after UTAD, the test phase comes as well. Alright. So you can jump in from springs or UTAD, or you can jump in from test being the conservative entry, or test here as well. Alright. So just repeating myself, like everything which is occurring before spring, you don't have to jump. Everything which is occurring before UTAD, you don't have to jump in there as well. Alright. So the next thing is that how do we know the spring has formed? Alright. How do we know the spring has formed? here comes the behavior of price as fractal behavior. All right, the fractal behavior of price. The Wyckoff, like on any time frame, like if you go to weekly, if you go to monthly, if you go to daily, 4 or 5 minute, or even 1 second, you would see Wyckoff being played out. Like you would see the schematics. All right, so that is a fractal behavior. Like whatever time frame you go, you would see Wyckoff. All right, so for example, like this specific setup is based on 4 hour. All right, that is a 4 hour time frame, and on 4 time frame you are seeing this accumulation schematic being formed, right? But see, in this specific region, right? In this specific region, if you zoom in to that, right? If you zoom into that on maybe like 30 minutes or maybe like 15 minutes, there is a chance that there might be another accumulation being formed, all right? There might be something like that. Like this is a spring, all right? So here is the spring, and that is some sort of like this. All right, so this basically this V shape is this on a lower time frame. Like this is based on 4 hour and this is based on 15 minutes. So basically this V shape can be this on a lower time frame, and what do we have right here is another accumulation being formed on 15 minutes. So basically, like if you have the spring and you anticipate that this is going to be a spring, you can use the fractal behavior of price on lower time frame, and you can get the entry as soon as price breaks structure. All right, so as soon as price breaks structure, you can jump in from maybe 50%, and you can place your stop loss below that, and you would be able to get in a hard time frame accumulation schematic. All right, and definitely that is some good risk reward ratio. So similarly, when it comes to distribution, uh, when we zoom into that thing, we might see another distribution schematic being played out. All right, similarly like this this. All right, so that just a second. So that V shape basically is the zoom in version of this specific spike which occurred on 4 hour. So this was the distribution phase which occurred on 4 hour, and this was the the fractal distribution on 15 minutes. All right, so basically this is how you can trade the fractal behavior of Wyckoff. Wyckoff is really simple to trade if you keep it simple, but if you start to make it complicated, then it would be much complicated as well. So I will be so you basically now should know that what how does the Wyckoff sounds and how can we trade that. So I will be jumping to a practical scenario, and I will explain that. All right. All right. So I had a pretty much clear example. Where is the replay button? Right here. All right. So you know you can see that the price was pushing to the downside. Like we had a good bearish momentum, and we are some sort of consolidation. Now according to what we studied, like the price can like the price is in a situation that it can continue down, or maybe it can show some reversal and can continue to the upside. All right, so like there's a chance that price might that this is some sort of accumulation. Like this could be an accumulation and price might start to go upside, while on the other hand this could be redistribution as well, and price might start to go to the downside. All right, so marking things up. All right, so so this is a redistribution. All right, just hold on a second. So alright, so we have our PS right here. Alright, we have our SC right here. We have our automatic value right here. We have our show right here. Right, so we have our thrust right here, and maybe that is another show right here, and maybe that is a U-jet, maybe. Alright, we are just expecting that maybe that is a U-jet, or maybe that is not a U-jet. Alright, so uh, how do we know that that is a U-jet? Alright, so basically the first thing, according to our SMC concept, this was the last structure. Look at how immediately price came back within the range. Alright, the wick, alright, and the price came back within the range. Alright, so that shows us something, like not everything, but something that the price might push to the downside, maybe, or maybe not, but we'll see in that. So we have this specific schematic on daily time frame. Alright, so let me just play one more candle. Alright, so we have another push to the downside, and we'll see if we can have anything good on lower time frame. So I'll do that on 2 hour. Alright, so here we are. So what do we have right here is another distribution. I'll do the parallel channel. Alright, so that is something which another thing I forgot to mention is that you know I drew the distribution schematic like that. All right, so it could be right like that, like on it. So we could have you that right this, all right, and it could be like this as well. All right, so it's not really important that the consolidation should be in a straight simple rectangle. It could be more like a parallelogram, or something like that as well. All right, so it depends, like you have to make your eyes comfortable to the charts and get used to it. All right, so for me this is something more like advanced thing. Like you can consider this as a U-chat. We have a break of structure, a test, and a push down, but I will avoid this explanation because it's something complicated. But I have another example to show, and I'll see if I can do that. So alright, so at this point, you are not sure if this is U-chat or not, but uh, if you want to have a conservative entry, like if you don't want to trade based on U-chat, if you don't want to do that, and if you want to trade based on a test, alright, then you can also do the same thing on the test phase, alright. So we have U-chat here, we have a break of structure and the so here. So basically the push up is the test phase, and after that we can see the last point of supply and stuff, like the price pushes down, markdown phase. All right, so uh, we had this UTAD, we had the break of structure right here, and we'll mark this stuff right here, and we'll see if we have any confirmation, any fractal distribution within this, so we can take a trade, or maybe not. Well, we'll see about that. This was pretty much good. Jay would agree with that because this was a valid distribution on tour, but that was a bit complicated, so I really don't want to explain that. But when you go in the basics, for you first you learn the basics, then you move to complicated things. So I really didn't want to teach you that. So I would go with the easy one. Alright, so here we are. So the price is recently in the test phase. Like we are expecting that the price might, that is our invalidation point. Right. So we are expecting that this redistribution phase has occurred. Like we have a major break of structure to the downside, and possibly we might get a test phase for us to re-enter in the trade on the daily time frame. All right, so we have our price in the order block region. So as you can see, like the higher time frame PYs, as like the price has broken liquidity, sorry, grab liquidity. It has broken structure. We had seen a good momentum, so that is the extreme PY I would check. All right, and according to the Wyckoff stuff, we have the Utah region as well. All right, so now moving down to the 2-hour time frame, let's see if we can get a fractal reaccumulation. All right, look how beautiful it is. So we are at the the chap right here in the uh, possibly this the test phase in the Utah region. So what do we have? We have a nice push to the downside. All right, we have a nice push, and what do we have right here is another consolidation. All right, we have another consolidation. What price did was, it went outside the range, and it immediately came back within the range. And talking about other PYs, like look at this, we have a good supply zone right here. Like according to supply and demand concept, drop based drop. So we have this supply zone right here. The price tab within that, and it's grab the liquidity in there and immediate push inside the range. All right, so we might just aggressively or maybe yeah, we might check our entry right here after seeing the momentum, check placing our stop loss above, and let's see placing the playing the price and see if we can get more push to downside. All right, so here's another thing, we are again seeing sort of consolidation. All right, so let's see. Not immediate. Oh, perfect. Do we have another fractal redistribution in the phase? I believe yes, because the same thing. The price grab liquidity. We have this order block, and price didn't it tested the hidden order block. Price tested that, it grabbed the liquidity, it came back within the range, and from here we can look out for another entry, maybe placing a stop loss of this range, and we can play the price and see. Right, so see right here. So that is basically how you first identify your trades, your the Wyckoff distribution, or maybe like that stuff like that. The distribution, redistribution. First, you do that on a hard time frame. Your hard time frame could be the daily 2 over 30 minutes. It could be anywhere. Like for example, I did that on daily time frame, but it's not really fixed thing to do that on daily. You can do that on 2 hour, but to check fractal schematics on 2 hour higher time frame, you can look out for on maybe 5 minutes. All right, so for daily I looked at on 2 hour because these were pretty clear, pretty awesome, and really I mean you should be very much clear on that thing. Like it's really simple, like as I mentioned before, we really don't want to pay attention to whatever things are occurring before the UDET occurs. All right, so we are really not paying attention to this thing. All right, we are paying attention to once the UDET forms, and you can look out for your entry confirmation. Like if you, and another thing, if you are really a type of trader who refines his thing, then he can also do that. Like we have this test phase, like we broke the structure, we did some sort of inducement, price went up, it's mitigated this order block. So you can jump in this week right on like 5 minutes, and you can even refine your entry more for better risk reward ratio. But it's up to you if you want to refine that, but that is not how I trade. Because just wanted to add another thing what I'm saying, like basically like people tends to uh, go for high risk reward ratio, all right? But personally, I just go with 1:4, 1:3 pairs, because uh, risk to reward ratio is inversely proportional to win rate. Like the higher the risk to reward ratio you aim, the lower your win rate would be. Right? So yeah, let me continue. So I was saying, like, if you are aiming for maybe like let me give you an example, and that is personally my understanding. Like you may disagree with that, you may agree with that, it's up to you, but that is my personal observation. So I was saying, like, if you're aiming for high restore ratios such as this, like 21.26, there are a lot of chances that your stop loss might get hit. All right, so there are a lot of chances. So what I meant is that if you are trading based on high restore ratios, your win rate would be significantly decreased, right? But if you are, doing some sort of less restore ratio, the price has some decent amounts of area to, breathe, then your win rate would be considerably, comparatively high as compared to the one when where you are, aiming for high restore ratios. So personally, why I prefer this method instead of this method, like both are fine. Like I'm not criticizing any one of them. Like both are fine. But personally, why I'm using 1:3 or 1:4 is because when you have consecutive losses in such cases, as I said, the win rate and restore ratio are inversely proportional. If you increase one, the other one will decrease definitely. So if you are trading this type of method, then you might have some consecutive losses, maybe like five, six, maybe it depends on how good you are or how bad you are. All right, so it depends. So if you are getting five to six consecutive losses, then the emotions will jump in the trading. All right, the emotions will get in your mind, and it will tell you to, it will make you overtrade, it will make you do some stupid mistakes. Right, I personally, when I started SMC, I personally was really impressed by mentors doing high restore ratios, and I definitely tried that. That is something which didn't work for me, so I just left it completely. So I really want to have a decent amount of win rate and a decent amount of restore ratio, maybe four, maybe three, but win rate, a decent amount of win rate for me to not get emotional, because I'm a trader and I get emotional as well. I have consecutive losses some days, so I get emotional. So just to avoid that, I'm doing that thing. So um, any questions regarding Wyckoff, the fractal behavior of Wyckoff, or maybe some discipline issues? You can unmute yourself, or you can, write in the chat box. If you have any question, you can ask in the chat box, or you can unmute yourself.
All right, please. I know a lot of you don't see asking questions. I don't know. Well, a lot of people don't normally like to ask questions or stuff like that. But I know you like to, process what you just heard. Take your time to try and understand what you have just been told before you ask any questions. But then this is a live section, okay? This is a live opportunity where you get to ask whatever you want to ask. That doesn't mean you're dumb or you don't know what you're doing if you're asking questions. It just helps you to understand what you've been told. Honestly, from what Flint just taught you guys, there are a lot of questions I could ask you guys here, and then you won't be able to give me answers, which means you don't understand them. But then he just explained those stuffs to you. Okay, so please, if there's any complications or any misunderstanding concerning Wyckoff, which you think he could help you clarify, this is a once in a lifetime opportunity for you to get that clarified. Okay, so if you have any question, and then you feel ashamed, or I don't know, you feel like it's going to be disrespectful for you to have those questions. Come on, ask your questions, okay?
Yeah,
Thank you.
yeah, sure, Samuel. You can ask. You can unmute yourself, or you can write in the chat box. Just don't feel shy, guys. Just keep your questions going.
All right. Good evening.
Good evening.
Yeah, I don't know if it's proper to ask this. It's from the last rule-based trading, and probably maybe when we are done with this session, I would ask that as well.
Uh, you said you had a question.
Yes, but it's not from today's
Yeah,
it's not from today's class. It's I think yesterday or the day before yesterday when you explained the rule-based.
yeah,
You said
sure. You can ask that. You can ask that as well. Samuel, I can't hear you. There's some issue with
Hello,
you.
can you hear me now?
Yes,
Hello,
yeah,
is it
yes,
clear?
yes, clear. It's clear now.
All right, please can you go to GU?
15 minutes.
All right.
Okay, great. I want to be sure if I got this right. Okay, I was able to mark out liquidity rate for the high that was created yesterday.
This one.
Yes. It took out the high that was created yesterday.
Yes, exactly.
Yes, so I was able to mark a break of structure to the downside.
All right. Yeah,
That
exactly.
yes, as at that point.
So like, what exactly is your question? If you can, clarify, like, that we had a liquidity graph, we had the break of structure. So what exactly is your question?
All right. Just want to be sure if I got your rule-based trading right, because after that, I noticed the momentum too was supporting it, so I had to put my fib at the top to the low of the swing that was formed.
All right. So
So
let me have a look. Let me have a look. So so yeah, we had some liquidity below that. Like this low was approximately relative to this. So we had this. We had a good momentum. This momentum got stopped out like nothing, because if the momentum gets stopped out like nothing, then that definitely shows that the fears are in strong. So we had the liquidity grab, we had the break of structure, we had a good momentum, and placing our Fibonacci. Do we have an entry?
yes, I think so.
So yes, that's absolutely fine. Like this, that is a good setup. You can trade that.
Okay, I saw that today, and I was wondering if you saw that as well, and if you'll be willing to see that as one of the setups you taught us, because I was able to add few pips to that. You said divided by three, so I
Yes.
was able to add few pips, and yes, I think I should still be in profit by now if I had taken the trade. So just wanted to let you know if I got it right.
Yes, absolutely. That is fine. That is perfect. That is perfect.
Oh, all right. Thank you then.
You're welcome. Yeah. Alright, so please can we ask question in the Telegram link because I can find it hard to understand now. Maybe I will watch the recording and I will get something question. Yes, sure. On power, you can ask us and we'll gladly reply you. Yes, it's perfect, Jay. We will do that, and you can ask question in that specific discussion group.
Okay, hello.
Yes, hello. Who is it?
Yeah, I I find it difficult actually if the range from the Asian session has been created.
Um,
Hello?
yes. Continue,
Yeah,
please.
when the range for Asian session has been created and determining where to set up the That's the swing high and the swing low, which is next, right?
Yes, yes.
Yes. So it's from the swing high and swing low now that is a that has been formed in the London session. Is that where we will now place the fib? Because I kind of struggled with that today.
Alright, so can you show me an example on chart where like you struggle with that? Like, can you tell me a specific pair? Like the previous one told me to check out GBP/USD. So do you have any pair in mind? Do you want me to do that?
Yes, please, if you can do that on Euro USD today.
Euro USD 15-minute time frame.
Yes.
Alright. So um, so you were looking for short setup or you were looking for long setup? Can you tell me?
I actually was looking for long setup.
Or long setup? Um, how? Can you tell me how? Like the first rule was to have an Asian range form. Alright, we have the Asian range form. The second rule was
Yeah.
to have a liquidity grab of Asian range. So do we have a liquidity grab below the Asian range? I don't think so. We do have. So the price didn't wicks. It didn't close. It didn't
Because
manipulate
I
it.
was expecting it to come down below the Asian low, but it didn't get there.
No, it's the long setup is not validated actually. Like you can't trade long setup because it hasn't actually grabbed Asian low. All right, it hasn't.
Okay.
So if this works VIX was like that, you can trade it. But the next thing you asked about the swing high. So basically, you might be confused if you should draw the swing high like that, or you maybe you should draw the swing high till that high. All right. So that is your question. Like you were confused in the Fibonacci placement, is it?
Yes, yes. I guess that was what I was doing.
All right.
The
So
first one.
that is not validated because look at the structure. Like we were trading like that. So we were still trading in this low, in this high. So we didn't have a break of structure till now. So the break of structure was occurred in this momentous move. All right. So in this, so you will do the Fibonacci placement in that. All right. So
In the big one. Okay.
yeah. So in because in this specific one, we don't see any structure break. All right. So there's no structure break because
Okay.
this was the low, this was the high, and this was the range we were trading based on. So once we get a break above this range, we have a structure break. All right.
Okay.
Uh, I hope it's clear.
Thank you.
You're welcome. All right, Mohammad Zishan, Nasdaq. Nasdaq is US 100. Jay, can you tell me? I don't really trade there. US 100. All right, 15 minutes. Is it? All right, so what exactly is your question, Zishan? Can you go through the Nasdaq move today? All right, so Nasdaq move today. All right. So we were breaking structures to the upside. We had our Asian range form. We had our immediate pullback. So at this point, like in this specific region, tell me, do you see any momentum? Because the basic thing is that I told you, like after a specific, what do you say, a liquidity grab, we should see a momentum. But even if you consider this candle momentum, alright, that's still kind of valid. Just a second, guys. On 30-minute, I'm not seeing the momentum as well. So for me personally, I would not consider this as a momentum. Alright, this is not a strong momentum. This is a strong momentum, but the whole move, this is really not a strong momentum actually. So I would not consider this as a strong momentum, and I would consider this as a setup invalidated. Like we have everything else perfectly. Like we have the breakout structure, we have the liquidity grab, And maybe if we draw the Fibonacci, we might get a pullback in entry. But for me, like the momentum is not strong, so I would not take a trade in here. Can you check this setup? Where was the actual liquidity grab? Uh, that was a liquidity grab, bro, because this was the Asian high and we got a liquidity grab. Can you check this setup? Check that. US 100, Asian, London, records. Alright, so New York, cap. Yeah, it's good. It's actually good. You can, still wait out like the other things, like for the setup, the rules are fixed. Uh, those rules are not met actually. Like, alright, but from other perspective, you can trade that because this momentum and the inducement that is being done below that, you can trade that. We had some liquidity grab above this high, so maybe from this high or maybe from this high you can trade the sell setup, but it definitely we have to check some higher time frame as well. So are we trading? Alright, so we had a dropish drop pattern. Yes, the setup otherwise is perfect, like you can trade that, but for me, the rules that I told you guys, those rules are not met. Like the momentum rule is not met, but otherwise you can trade the setup according to other type of trading, the inducement stuff and the range, and you can do that. What is the name of indicator used to highlight the Asian zone? That is Asian range by Nico. This is Asian range by Nico 948. You can use that one. NICO 948. You're welcome, Zishan. Any other question? Any question you want to ask regarding what I told you guys?
All right. Good evening once again.
Good evening.
Yeah, please. Still regarding the rule-based setup you taught us, please can you what are the pairs that you can recommend that it works best for
All right.
in your own experience?
So basically, like I have backtested this specific setup on GBP pairs. Like I have backtested that on GBP JPY, Euro GPY, Euro GBP, sorry, and GBP USD. Like these three pairs I have backtested on. So for me, like Euro GBP and GBP JPY was pretty much good. Like recently, GBP JPY is not showing some sort of liquidity grab stuff. Like it's just going to the same direction because of JPY correlation to that. So JPY is not really showing some good things recently, but in the past data, it has been a good data. But personally, if I just tell you the best pair which have been so far is Euro GBP. But obviously, I just backtested three pairs, only three pairs, and if you really want to do that on different pairs, you can do that, and the best data you get on your pair, you can trade that. You're welcome. Any other question?
With respect to Wyckoff, do we look for Wyckoff in every consolidation?
Um, yes, Osega, you can do that. Like Wyckoff usually occurs in a consolidation. Like let me tell you, like you may see this as as a push up, right? You are seeing that as a push up, but maybe I don't know really, but maybe that on a higher time frame is still a consolidation. Just go down. So see, we are kind of still in a bit of consolidation, maybe you can say, some sort of consolidation. We have this right here. Uh, you can draw that like this, alright? So yeah, so pretty much the market is consolidating every time frame. No, no, sorry, not every time frame, but it's pretty much consolidating. Like you can spot that on higher time frame. Like these waves which are impulsive on lower time frame are basically consolidations on higher time frame. So you can definitely look that. But if things are not clear to you and on each time frame, you just don't force the Wyckoff schematics on those pairs. Like when you're seeing a proper consolidation, you can do that. You can definitely place your schematics and look out for if the price is going to go upside or to downside. But what I would recommend is like in your initial stages, just get used to the basic stuff like the simple consolidations and try to look the schematics in those. When you get a hand on that, you can definitely look out for some complicated consolidations as well. Any other question, or we shall move on? All right, so Jerry there.
Yeah, I'm here.
All right,
Okay.
so over to you, guy.
Thanks, bro. Okay. Um, over everything, when I just taught you guys, this is currently um the most easiest and most understandable Wyckoff explanation I've ever seen. Honestly, due to um, everything I've seen. Okay, I have had multiple knowledge, multiple sections on Wyckoff. Had a lot of people do explanation on this, but then this is the easiest I've ever seen in a very long time, though. So I have been trading Wyckoff for a while. Um, how I got to trade Wyckoff was um, well, I can't really explain how I got to understand them all. I guess based on my knowledge of SMC and what I shared with you guys yesterday, trying to fuse that with Wyckoff, with the understanding this structure. From my knowledge, I feel structure is everything. All right, so if you're going to be trading Elliott Wave, Wyckoff, smart money concepts, retail and all. From what I told you guys from the basic and the first section of this webinar, I told you structure is everything. Okay, so basically that's how I trade. I trade with structure. So doing that using Wyckoff wasn't that complicated for me. I currently could trade any strategy at all. Anyone you want me to break down for you. Once I get the rules of that, it's not that difficult for me to fix that into my chart. That's only because I try to find and only follow structure based on that. Okay, so I'm going to be giving you guys a few examples of how to do that. Should in case from the first section it wasn't that understandable to you. Okay, so I will do that again from the beginning, and then maybe you could learn off that, or you could try to watch that whenever you want to do your back testing. All right, so and also, I know a lot of you have heard Michael being used with um, volume, right? So I do use that too. I do use Michael with volume, and the best I have ever done is following the basic rules of volume. Okay, so I'm going to be sharing that with you guys also. So you know you could do that yourself. So now you all know. I don't know if you all know how to use volume and trading. Sorry, I was thinking this was my mentees and not. Uh, a lot of you don't know how to use volume and how to trade Wyckoff. Okay, so you have been seeing the drawings of Wyckoff on the internet, the schematic and all, but then trying to fuse that in your trade has been complicated for you, right? This is correct, right? So if I was to trade Wyckoff, let me say on this um, pair, this is GBP and ZD, 1 hour time frame. Okay, so this is not an analysis, all right? This is just an example. Let's say, first of all, this is what I would do. This is me trying to trade Wyckoff on a regular day, okay? First of all, I would look for the break of structure. Where is price heading? I see price is currently at premium of this range, right? This is a range, because it broke structure here. I don't know what's happening in the past data or no. This was just a random pick, okay? I don't know what's happening here. I've not checked that. I've not seen the current data or no. But then I'm trying to use this on Wyckoff. And that is a very important um, knowledge for you to have. The understanding of the previous pair and all. But then I want to show you how to use Wyckoff, even not using the previous data and all, but then using just structure. Okay, and you would see how it will still make sense just because I'm following structure. Okay, so I see this as a break of structure within this range. I'm expecting price to go down, go back down to clear out these lows. Okay, so I see this relative equal lows over here, which are within discounts, right? Of the range. So if price is going to be heading back up, at least it has to grab this liquidity, right? These stacked up lows. So then, what like when I said, you need a consolidating price to see Wyckoff. Wyckoff mostly is being used on a counter trend. It's easier to spot on a counter trend. Something like price is on a downtrend, but you're expecting price to pull back a little bit into premium. Okay, so this is a downtrend. Expecting price to pull back into premium. Is you could easily work off here. Probably when you see a distribution from it, you know that price would be moving into you know premium anytime soon. So let's say this is the buying climax, and this was the uptrust. So you're expecting a U-turn, to form, and then you had a POI within premium right here, and then that happens into your POI. Okay, so the U-turn came into your POI, and then gave a break of structure. So returning back, using the Wyckoff schematic which you were watching, this should be a test, right? And then Wyckoff schematic, why is it supposed to go back down? And then structure is bearish within premium and in your POI. So yeah, that's just the basic knowledge of Wyckoff. And using volume, I'm going to be sharing a little knowledge of volume, how you could use that fixing with your Wyckoff. Okay, so the basics are if price is rising and volume is rising, it's a bearish sign. Okay, so let's say price was retracing back up, and then volume were decreasing. Okay, so let's say you see volume was decreasing. Let's say something like this was happening, and price was going back up like this. So which means price would be coming back down anytime soon. Okay, so that's how to use the volume confluence when it comes to bearish bullish trend. On the bearish side, you see price increasing and volume is decreasing. That's a sign of that's a bullish sign. Okay, so and also if you see, not to complicate you all, I'm just going to write it down and send to the channel. All right, so you guys could go through that when you're free. But it's really really understandable and really simple to use if you follow the rules. Okay, so now let's say this is what I'm expecting, right? And I see this as relative equal highs and stacked up internal highs, right? So I'm expecting price to rate this and before dropping. Okay, so we have a change of character here. So a lot of traders will be looking to trade from this zone, which the retailers and all will be looking forward to that. And then at the same time, we have a demand zone over here. So, but then I want to see the Wyckoff view of this, right? So this is the break of structure, price is heading back down. So I want to say distribution from within this. How do I spot that? Okay, so using the distribution schematic, it looks like this, which is buying climax, ARST, you know, UTAD, so UT, then the UTAD, test, last point of supply, then down. So basically, this is just a freehand sketching of how Wyckoff is supposed to look like, right? So then, where is the primary supply or support? Yeah, primary support for um, distribution. Okay, so that should be over here. Supply, primary supply, right? Okay, so then if you want to say blind buying climax, where price is rising, and I'm also going to share a little knowledge on studying Wyckoff, so you could understand these letters on it. So if you see someone join them, you could easily understand them. Okay, so I'm going to share that also to the group to help you all also understand that. All right, so this is practically a bear, uh, a bearish schematic, but then it's not a normal. There are multiple schematic you see in Wyckoff. Okay, so this is not a normal Wyckoff schematic. If I was to be looking at this, this is yes a bearish schematic.